Hello friends, welcome back to part 16 of my Tesla 2022 Q3 earnings forecast video review series. I got it right that time. So we're going to get right back into the action where we left off. Below the income statement, we covered the earnings per share basic and diluted on a GAAP basis here, and talked a little bit about the stock splits that have happened and how many shares that leaves. So the next line here is called DTA flowing through P&L per share diluted. What is this doing? Well, it's just a place for me to quickly be able to see how much of the DTA, the deferred tax asset, I am forecasting will flow through the P&L in the quarters where I have those expectations. So I talked about those in a previous video. I've talked about them a bunch over the years. I've forecast them to hit in prior years and they didn't happen. Part of the reason for that is that Tesla hasn't shown profits in the US region because so much of Tesla's fixed and corporate expenses are happening in the US. And those are offsetting the profits that are generated by factories like Fremont, occasionally Buffalo, Nevada, etc. Whereas in a place like Shanghai, Tesla's expenses are almost all hitting the cost of sales line, with very little SG&A or research and development costs hitting in that region. So there's a lot more profits coming through from those areas, right? So I've got it forecast again to hit in Q4 and Q1. I did that last year and the year before, and they didn't happen. They might not happen this year either. We'll find out. Or they might happen in different quarters. But whenever they happen, I think it's going to be about 45 cents worth in the first quarter that Tesla declares it on a per share basis, and about 11 cents worth in the following quarter, if the following quarter is a Q1. Now, if Tesla were to take it this quarter, for example, they wouldn't be able to take the 11 cents in the next quarter because it's still the same tax year, and you're only allowed to declare a maximum of 80% of it in the first tax year that you start to declare it. All right. So that's what's going on there. What do I use this number for? To back it off of my earnings. So you could say, hey, 223 is my GAAP earnings per share expectation, but without the deferred tax asset, it's only, the thing in the way, it's only $1.78. Sorry, I've got a dog bed between me and the bottom of my screen, so I can't see the bottom edge of the window unless I do something like that to see it. All right, so that's what's happening there. You knock off 11 cents here, and even I can do that math to 238. Or if you want to look at that on a non-GAAP basis, here's my non-GAAP earnings down here. So in Q4, $2.11 if you back out the stock-based compensation, less the 45 cents, makes 66, yeah. $1.66, and then 236 minus 11 cents, 225. I am capable of doing some simple math. All right, so that's what that row is good for. Next, I have a row here called Tesla stock price forecast at 30 times next 12 months adjusted EBITDA non-GAAP. So what is going on in this on this line? Well, we're just looking at the sum of V1251 through Y1251. What's going on there? That is the adjusted EBITDA non-GAAP, which we will get to later. So over the following 4 quarters, I'm expecting this much adjusted EBITDA to happen. If Wall Street were expecting for those adjusted EBITDA numbers to come, and if they were applying a 30 multiple to those adjusted earnings, then on a per share basis, after dividing by 3.1 billion shares, they would have a Tesla stock price in Q2 of 2022 of $373. That's a lot higher than Tesla actually traded in Q2 of 2022. So if you believe my forecast for Tesla adjusted EBITDA, and if you believe that a 30x multiple is fair value on next 12 months EBITDA, then you believe you got a good deal buying Tesla stock in Q2 of 2022 for less than $373. That's what that line is saying. And this number gets bigger because the Tesla adjusted EBITDA number will keep getting bigger over the next 12 months. In my forecast, it does. And the share count is getting a little bigger, but it's not growing at anywhere near the same rate the adjusted EBITDA is growing by. And then when you apply that 30x multiple to it, which you can argue about, maybe you want to pick a different number. If you're Tesla Q, you probably think Tesla ought to be trading at 1x next 12 months adjusted EBITDA. I saw a tweet from Brad Munkin just today saying, what if Tesla stock price falls to $50? Well, good luck with that, Brad. I applaud your consistency trying to short Tesla at all points in time over the past 5 years. But how's that been working out for you, buddy? Not that great. So that's what happens on this line here, just forecasting out, hey, if you believe my adjusted EBITDA number, and you believe a 30 multiple on that next 12 months adjusted EBITDA is a fair valuation for Tesla's market cap, then if you believe these shares outstanding, then you believe, or these shares outstanding, the diluted actually, then you believe that this is a decent forecast for where Tesla's stock will be trading. This is not financial advice. Do your own research for entertainment purposes only, etc. I don't want to see any comments about should I buy Tesla stock. You should consult the services of a qualified professional financial advisor who can give you advice based on your individual circumstances, because everybody's circumstances are different and everybody's timelines and risk tolerances are different based on their individual circumstances. Okay. Man, I'm not going to get anywhere if I spend as much time on every row as I just spent in the past two. So here's a trailing 6-month average stock price. So this is where Tesla has been trading, and I've been punching in actual numbers here for these, and thank goodness I updated it for Q2 with the $292 and 21 1/3 cents that Tesla actually averaged over Q2. Then into the future, I have to forecast this number because it hasn't happened yet. So what I'm doing here is saying, hey, give me just the simple average of what it was a quarter ago in terms of the actuals, and then what last quarter's and this quarter's Tesla stock price forecasts say it ought to be, right? So if the stock gets its act together and realizes that it needs to move at least 2/3 of the way to this average stock price forecast from where it actually was a quarter ago, then it'll rise to that level, is what that's saying. So that's how I'm forecasting that row, which I'm going to use later. Trailing 6-month market capitalization. So this is just a different way of looking at, instead of stock price, which changes based on stock splits and stuff, how much, oh man, look at these market caps from Q2 and Q3 of 2019. Well, there's that $50 that you want. Brad Munkin, maybe it'll return to the 2019 levels when you thought Tesla was going to be going bankrupt imminently. Probably not, though, because these are the earnings numbers that were being reported back then. That's a negative number. And these are the earnings that have been reported lately, and here's what I have in my forecast. So these are not similar to those. Maybe it's time to revise your bear thesis and realize that this company is really growing earnings quite a lot, which the market typically rewards with share price appreciation. Okay, I'm going to stop dogging on Brad Moonkin at some point in this video. Okay, now we get to some CEO stock plan metrics, which I can go through a little faster because it's so irrelevant, as almost all of this has been expensed already and hit the P&L. I had to add these here so that I could show on this page the outcome of the calculations I'd been doing on this other tab, the CEO bonus tab, where I had to plug in all the information for all the tranches. You can pause this and look at it if you want to. And then what the expense impact was going to be as Elon made progress towards achieving the goals outlined in his 2018 CEO Performance Award. So all this math happens on this other tab, and then back on my detailed model tab, I just took a few rows to say, hey, this is the high-level outcome. So what's the highest CEO plan for the market cap goal that has been achieved so far? And since Q2 of 2021, it's been the top tier, the 12th tier of the plan. A $650 billion market cap was the high end of that plan. And as you can see, Tesla has been way over that most of the time since. And I'm forecasting that to continue into the future with trillions and trillions of dollars worth of market cap in my forecast, which will be wrong to some extent or another. Next is a quarterly annualized adjusted EBITDA number, which I wouldn't care about at all, except that it's important for that bonus plan calculation. Highest CEO plan EBITDA milestone achieved is saying, hey, the goals were $6, $8, $10, $12, and $14 billion worth of annualized adjusted EBITDA. And as of Q1 2022, Elon has achieved all of those. Then another goal from the plan was quarterly annualized revenue. So those tiers kept going, I think, 35, 55, 75. Let me click here and see. Yeah, 100, 125, 150, 175 for the revenue goals. But it's irrelevant what these last 4 revenue tiers were. There were 16 allowable tranches, but a maximum of 12 could be awarded. So all of the EBITDA goals have been awarded, and all of the revenue goals have been earned as well at this point, which is why almost all of that plan has been expensed. Okay, so here's that last revenue goal that's available to Elon getting achieved in Q3 of 2022 ought to put the last nail in the coffin that is those stock-based compensation awards under the 2018 plan. And then maybe there will be further compensation for Elon in the future. We'll see how that unfolds. I needed the quarter ending dates here to do some calculations, so don't worry if you know that New Year's Eve is the 31st instead of the 30th. It doesn't matter. It's just for doing some math. CEO bonus forecast, milestone goals achieved, so a maximum of 12. And I've got that 12th one being awarded as a result of this $75 billion tranche being achieved, which leaves no milestone goals remaining probable of being achieved, and 4 milestone goals not probable because, as I mentioned earlier, there were 16 possible with only 12. There were 16 outlined in the plan, of which only 12 could be earned, max. So cumulative CEO bonus shares issued is here, and then new CEO bonus shares issued, which is different from the expensing. The expensing rules are very strange GAAP accounting. Probable and unrecognized, net probable and unrecognized. Okay, so here's the So that's the CEO bonus section. Here's the compensation section, stock comp stuff. I went through that 2 videos ago, so go back to that one if you want to see me talk about each one of those rows. And that leads you to non-GAAP earnings. So here's my forecast for non-GAAP earnings. $4.766 billion in Q3 after you take the GAAP earnings and you add back the stock-based compensation, which is a non-cash expense, to get to more of a to get to the number that Wall Street analysts care about. They don't care about the GAAP accounting rules. They want to know what the non-GAAP earnings are, which is why when you see the EPS reported, it's these non-GAAP EPS diluted numbers and not the GAAP earnings EPS that matters to Wall Street. Okay, so if you adjust these for the stock split that just happened, then Tesla's non-GAAP EPS was $1.07 in Q1, 76 cents in Q2, so, you know, $1.83 combined. I've got $1.36 in my forecast for Q3, and then this $2.11 here in Q4 seems like a giant jump. 45 cents of that is that one-time tax benefit that will get backed out by Wall Street anyway, even if it gets declared as I'm forecasting it to. So they'll knock that number down 45 cents to only $1.65-ish. But still, $1.65-ish is pretty good. And then happy days ahead for Tesla stockholders with a lot of earnings growth. All right, that's a good place to end before we get to the PEG numbers, which will require a lot of explanations. So I will say, if you've enjoyed today's video, click the like button. If you're not subscribed to my channel already, why not go ahead and subscribe to my channel and click the notification bell to get alerts as I release fresh content, and I will see you in the next one.